Welcome back to the channel. My name is Patrick. Today I've got a trade recap for you. Was out with the kids this morning, so I wasn't able to record as I was on the school run. But we did take a trade, and I'm going to walk you through it. You probably could guess what I did if you've been following the channel. First thing in the morning, price was here. What do you think I did? Buy or sell? Yep, that's correct. I bought. Okay, so if it's at lows, I'm buying. Look at this. It's very straightforward. Look at this. Look at these lows. Price trended down. It was a low because it's under this low. I buy it. Look what happens. If you waited and price gets underneath here, over here, puts in reversal, that pullback, it's very easy to see on the naked charts on the 5-minute time frame. That's that buy easy. Gets down here again. Look. Even during the Asian session or the end of that same day, that session, it came up. It gets underneath it, that's a buy. Gets underneath it, that's a buy. So it's down here. New lows, lower lows. It's a buy because to continue this current downtrend, it pulls out and it pulls back in. That flag back in, that is what I buy. Why? It's because it's easy to read this. Okay. I can sell this as well. Okay, I'm sure I did sell this. They actually sold it there. I didn't sell it here. This was the London session price action. I sold that. Okay, and in theory, if I'm in line with the trend on the higher time frame, I could hold this to try and get down beneath this low. Okay, but it's just too look. It's just too slow for me to hold it that many days. Look, if I bought it here or sold it here, it came down, came all the way back up to my entry. Sold it again, came all the way back. I can't do that. I'm okay to just sell this, get out that day, sell this, get out that day, and take it a day at a time. That's how I prefer to trade, right? So, point being, this is straightforward now. If it's at lows, you're looking for buys. If it's at highs, you're looking for sells. Straightforward. You should know that by now, okay? So, routine trade for me. Again, what we look for is a breaking structure to confirm the price action that it is looking to do that pullback. So over here, we had a nice little trend, a high, lower high, lower high, low high, all through the Asian session. Come down here to the London before the start of the London session. And London session likes to run the liquidity on the previous session, which is the Asian session. So you can expect some kind of pullback, which is what's going on the higher time frame, and also there's money here, so London session to run that money, and from there that's when you can expect a reversal to drive it down to continue the downtrend. So I bought this and I could potentially wait and sell this once it puts in a reversal to go back down. I'm not interested in that. One trade a day is all I need. Something I wanted to touch on this video, I mentioned it at the end. Stick around to the end. So let's talk about this trade. Let's wrap it up quickly. Wasn't much to look at. Let's go trade history. I took about 5 minutes to analyze this. Okay, I looked at price where it was on a higher time frame. I checked the news forecast. I know what I'm expecting. There's a lot of news today. There's a lot of volatility. So I'm expecting a pullback, price to behave in its normal structure right now until the news. So I'm expecting that pullback, which is this buy. So I bought it on there, and I took my 10 pips. So again, I was on the school run this morning, so I wasn't able to wait for the breaking structure. Okay, you can see my entry is very early. Now, typically, if you would have entered here, you would have put your stop loss here, you would have got stopped out. I use my negative risk to reward ratio of 2 to 1, and that's why I was able to take this trade and just get on with my morning, getting my kids ready for school and taking them to school. Didn't even look at the trade until I got back in and it had hit TP after I got back in. Okay, I didn't have to do nothing to this. So it did pull down against me. It went down from there, it pulled against me about 6 pips. I had a 20 pip stop loss for this. None of these are recommendations. This is just how I trade, okay? None of these are recommendations, just how I trade. So let's see, 20 pip stop loss from here. Not everyone likes 20 pip stop loss. It's not for everyone. This is just how I do things, based on backtesting, based on actual experience, based on learning from my mistakes. This is raw trading, believe it or not. I don't even want to go there. But anyway, so yeah, basically a lot of people talk, but there's not a lot of action. Anyway, that's all I'll say on that. So if you're following the trend, you see we are in a demand. Prices pull back in there. I could expect some kind of pullback. Breaker structure gave me the trade I wanted. My stop loss from my entry point would have been sitting on 75.4. Okay, so 75.4. Just want to show you that quickly. So it's about there, yeah. As you can see, it didn't come near my stop loss. I was good. My stop loss should actually be beneath this low here, this flag here, okay? Because as it's breaking structure, this zone, if it breaks this zone, you'd expect it to continue down to this next zone, by the way. So breaks this zone, continue down to this next zone. And this next zone is an interesting one. It is a zone I've actually got marked out. There is an imbalance here. Price has not visited. I had the pending orders set here, but I removed it because price had moved away so far. But as it's looking like it's heading back towards there, I've got this highlighted on my phone. I'll put it here as well. I expect price to get down here. So eventually it should get back down there. And the reason is because there's an imbalance here. Price moved away really quickly and now it looks like it's coming back down. It's probably going to head back down there. It may not do that today. Not today. It definitely won't do it today. It may not do that straight away. It may go up again before it comes down, but when it does eventually come down, I expect a reaction from there because there are pending orders there, and that's what I will scalp as well. So something to bear in mind. That's on the 9th of May. Have a look, you will see what I'm talking about. Euro USD, 9th of May, you see there's an imbalance there. I expect when price gets back to this zone for it to have a reaction. So it will come down here and that little reaction, or a full reversal and continue going up. We'll see. So where were we? Stop loss was here, nice and safe. I was expecting manipulation, didn't get nothing today, so I could have left my stop loss there. News is later in about 3-4 hours, so probably why I didn't get no manipulation and just went straight to TP. So used the negative risk to reward ratio. I was able to stay in the trade, got in it early, didn't worry about it. Eventually did break structure, so that confirmed that I was right about it. I did have a look while I was away. So when it broke this high here, that should have been my entry when it broke this last lower high. Okay, so when it broke it there and it pulled back in it, and as you can see, people, I don't play around. I really focus on this price action. You can see right here, that's where it came back, bounced off it multiple times and was brought up again to continue this uptrend. Well, not even an uptrend, but this drive up, okay? So price point, entry, strategy, all of it's working. Backtest it for yourself. Don't take my word for it. Backtest it. Okay, so that was this trade this morning. Trade history, as you can see, 10 pips using risking 20. Got my 10 pips. That's it. Something I wanted to touch on. So when I first started trading, I actually started with stocks, and with stocks, it's a crazy world in stocks because it's lower volumes, and so it's easy for it to be manipulated. And the time to trade stocks was in the late afternoons, so it didn't work with my schedule. That's why I moved to Forex. But something I used to do with trading stocks, I used to scalp, but I used to also take note of all my trades. It's something that I've neglected when I started doing trading Forex, because most of these platforms take note of your trade and so on. And also, it was maybe about 2 years ago now when I started, so I've lost some of my good habits. So this is a good habit for you. If you are struggling, you need to take note of your trades. So get a journal, get a spreadsheet. I'm going to start a spreadsheet on the beginning of the next month, and I'm going to track every single trade, whether they're wins or losses, what pair I take, how much lot allocation. And the reason I'm doing this is just to reinforce some good habits I've started. One trade a day, one pair, good risk management. Now I want to record my data because I want everything to be routine as possible. So I don't have to think about this. I just come in, log in, take my trade, log out, log my trade. And I want it to be like a 9 to 5, but it's not a 9 to 5 because this takes me about 5 minutes to read the charts, and probably, well, it takes a little bit longer. It takes as long as it takes to make the money. It's all good. This is something I wanted to share with you. It's a good habit of mine. I'm gonna start doing that, and you may see that more in my videos when I start logging my trades, and you could track my wins and my losses better, and you see my risk to rewards and so on, and all the information you may have questions about. So stick around for that. If you found this useful, you know what to do. Hit the like button, hit the subscribe button. I'll keep getting videos out to you. This is Patrick signing out. Until next time, peace.